Hello, this is John Kicklighter, Global Head of Content for StoneX, here to talk about the market conditions heading into next week, as well as the top event risk that most investors are going to be watching for market movement. Now, when we look at the overall conditions that we're dealing with, it seems like we continue to ease off from the high-level reactive nature of the trade wars that we had just a few weeks back, the tariffs being implemented between the U.S. and China, and the tariffs that were put upon most of the United States trade partners and subsequently reversed. But that is still an underlying feature of these markets. We're not as reactive and responsive to major event risk, but there's a dissemination of potential fundamental influence across multiple themes. And that's going to be the market conditions that we are dealing with. We also have seen a shift in volatility away from the US-centric markets that were highly volatile, like the US dollar, like the S&P 500 via the VIX, or like treasuries via measures like the MOVE index. And that volatility is still lingering, however, with the underlying conditions, but also with other metrics like gold and its GDZ, or when you're looking at something like oil and OVX. So it's not that conditions are complacent and back to a long-only perspective. It's just that markets are taking a little bit of a break, looking for that clear guideline of fundamentals that will steer either a bullish or a bearish view for risk trends, the broader sentiment of the markets. So that is the conditions for which we will be entering this new week. Now, in terms of top themes, what would actually have the capacity of moving the broader market? Not just saying a region or type of asset. I'm talking about the broader market and sentiment at large. Well, it still is sticking with trade wars. In particular, the US and China. The markets are hinging upon just splitting hair commentary between the United States and China, whereas Donald Trump has suggested that they have been discussing a trade deal. China has vehemently suggested against it and said that it would only come to the table to talk so long as the United States has removed some of its unilateral tariffs, as they call it. So this back and forth is very much in the news and newsworthy, but it's also market worthy. So you can expect some volatility, potentially even trend development if we get clarity from this particular theme. Keep it very top of mind. Aside from that, we're still trying to see what the outlook for economic slowdown is for the United States and the rest of the world. If it is a persistent trade war, that recession risk will rise. If the trade wars were totally reversed today, it wouldn't necessarily suggest that we're going to immediately go back to growth. We still have that risk of a slowdown, and obviously the term that people want to or worrying about and focusing on is recession. So do we still have recessionary risks with trade wars alleviated, and will they be alleviated? And another theme to be mindful of is Fed independence. That's because it's one of the top themes for event risks for next week. So what do we have in terms of day-to-day top-level events from Monday through Friday? Well, Monday is going to be a little bit of a quieter session because London's offline for bank holiday. That is going to have a material impact globally. When we see a disruption in liquidity, it can very much curb the market's motivations and responsiveness to event risk because there will be a shift in focus to when liquidity is restored, but also to higher level event risk later down the line, which is absolutely something that we're looking forward to. But on Monday, we do have the ISM service sector activity report. This past week, the manufacturing report came across wires, and it slowed, not substantially, but it was already in contractionary territory, which is not a good view, given that trade wars are being fought in large part to restore manufacturing into the United States or onshore it, and it doesn't seem to be working out so well, at least in that data series. Services are accountable for more than 3/4 of US GDP, so we want to see how that figure is doing, and it will give us a good trajectory on economic activity, which the markets are much more interested in taking all the data to project that going forward. Now, Tuesday is a little lighter. We have event risk like US and Canadian trade balance figures and a few others that are, especially in the North American region, going to be interesting as we account for trade wars, but it's not going to override our inherent interest and pulled forward attention to what's on Wednesday. That Wednesday FOMC rate decision is going to be top event risk amid a lot of other listings. I would say look at the economic calendar, but everyone's going to be focused on what the FOMC has to say because there's a lot of pressure from U.S. President Donald Trump for them to cut rates, even though the Fed has reiterated it does not see the conditions that would suggest that they can cut rates to get ahead of any kind of economic slowdown that are a byproduct of trade wars, because they also see some risks of inflation. Now, if they don't move, and it's very unlikely that they do, we're probably going to see some response from the White House. And it's going to touch off yet again the question, how independent is the Fed? This is going to be put to the test, and those considerations are more longer term, but their forecasts and Jerome Powell's press conference after the rate decision, half an hour after it happens, will definitely be mulled over and really split apart, because there's going to be a lot of back and forth in the news about it. Now, getting into Thursday, in the context of the Fed, we're going to have the Bank of England rate decision expected to cut by 25 basis points, and it's going to almost certainly reference these trade wars, and that's going to only further the discrepancy and message that we're getting from the Fed and the rest of the world, considering that trade wars seem to be originating from the United States. We will also have a Canadian financial stability report, which I do believe is going to be very important in the context of things. Will it be globally market moving? Probably not, but it will certainly add to the trade war narrative, and certainly for Canadian markets. Now, Friday is going to be a little quieter in terms of the amount of event risk, but we still continue with the same general trade theme. We will have Chinese trade balance figures in particular, which I will be watching, and I think we'll keep that context going and debate about whether either China or the United States are going to have to fold, because they are taking the brunt of the trade war fallout. And of course, they have leaders that will not bend. So that particular uncertainty and how it has contextualized the theme of global growth is just something we have to keep tabs on. So that's the major event risk that we have coming out next week and the general conditions that we have. For more good financial information, like and subscribe.